All right, everybody. Happy Monday. Today is August 5th. It's back to school here in the Atlanta area. It is not a happy Monday in the market. Uh, so, rough day or rough night overnight for the Japanese market. So, the Nikkei 225, which is their version of the S&P 500, was down over 12% last night, largely brought on by the fact that the Japanese yen has strengthened materially over the last couple of weeks as what they call a carry trade has started to unwind. The carry trade is where investors have been borrowing money denominated in Japanese yen at very low interest rates, and that currency has been weakening. But as that currency starts to strengthen, all of a sudden it becomes more expensive to pay it back in dollars or euros or whatever other currency was paired against the yen. And so it forces investors to cover their positions. It forces them to sell what they've bought with that borrowed money and pay back the loan that they've taken out to be able to invest that was denominated in Japanese yen. And so the unwind of that leads to some very dramatic action in the global equity market, bond market, currency market. And so that's what we're seeing a little bit here today. I mean, so currently the Dow is down 888 points. It was down over 1,200 points at one point today. And so we are off the lows at this point, and that's something that we'll probably hear a lot is, in the post-market commentary, should the market close here, is that we are off the lows. But one thing that I will say to put in context here is that we are far from experiencing one of the worst days in market history. There have been many days that have been far worse than this on a percentage basis, right? So the Dow's down 2.25%, the S&P's down 2.5%, small caps are down about 3%. So this is not the end of the world, and so and I don't say that flippantly or in a dismissive way. The nature of the way that we do things here at Reveille, where we're trying to identify the primary trends in the market and make sure that we're aligned with that. When we actually go and look at the chart, we're going to find out that, so here's the S&P. It's not a great day in the market here today. And what we see when we're looking at this bar here is that the market has rallied since it opened, but we're still in an uptrend. We're experiencing a pullback within an ongoing uptrend right now. The $64,000 question is whether or not this is going to turn into something more substantial. Is this going to undo the uptrend that's been in place for a while and mark the beginning of a new downtrend, in which case we have no idea how long that downtrend could last. But we see that the market is still within an uptrend. We are experiencing a pullback within this uptrend. And so I think we need to give the market the benefit of the doubt here. It's still not comfortable when we have these down days like this, but let's put into context exactly what we're experiencing. Zoom out, look at the Russell 2000, which is a small cap index, which did really, really well for a couple weeks here. And it has pulled back dramatically in the last week and a half. But we look at this and we notice that this is still in an uptrend, right? It's a bad day here. Again, it's down about 3% right now here on Monday. But it's well off the lows from where it traded this morning. Still no sell signals here. Nothing that would suggest that this uptrend that would have started, earlier this year have been undone. So I think we need to give the market the benefit of the doubt here, and we need to recognize that there are going to be some bad days out there. but we don't need to emotionally react to the market. We still need to put into context what's going on, what's the broader trend here that's at play. Now, if we start to see that these markets are breaking down where we're getting sell signals per our discipline, then I would tell you that's a market that we don't need to participate in. We need to sell, we need to raise cash, and then we should expect in those markets to see more volatile days, more down days. But the case right now is that seasonally we've got a number of headwinds. We're in an election year, which is historically a little more volatile. We're in historically the worst 6 months of the year, from the end of April through the end of October. Historically, the worst 6 months of the year, where the market doesn't make any progress. So the fact that we're in the summer in an election year and we're seeing volatility shouldn't be a surprise to anybody. And so we need to make sure that we're not reacting and making rash decisions to what's going on in the market as it relates to our investments. But that's what our rules-based investment discipline is designed to do. It's designed to help mute the noise, focus on the trends only. And what we're seeing here is a pullback within an ongoing uptrend. Now, when we look at something like commodities, it's the Bloomberg Commodities Index. It's been in a downtrend, for a couple weeks now. That's something that we haven't wanted to participate in. But stocks, for the most part, in uptrends. Bonds, in uptrends. This is the U.S. Aggregate Bond Index. It closed last Friday at a new 52-week high. We've been a strong advocate for bonds. We were increasing our weighting to bonds in the fourth quarter of last year as they were producing buy signals. Some of the highest yields that we've seen in 2 decades in bonds, a lot of them trading at discounts to their face value. And once again, bonds have been providing a little bit of a ballast against the equity market risk. And so that's something that we haven't seen for a couple years. And a lot of people have abandoned the bond market because they had a bad experience with it a couple years ago, right? They were holding it through this. This was not a time to be involved with bonds back here. But this is, right? This is something that you want to own. This is an uptrend. And you want to keep uptrends in your portfolio. You want to avoid the downtrends. So, again, the big question is going to be, is this pullback within an uptrend, is it just that? Is it just a pullback within an ongoing uptrend in the narrative today that's got everybody spooked? We're going to forget about it in several weeks or a month, and we're going to look back and we're going to say, what was it that caused the market to pull down here? Does anybody remember exactly what the reason was right here for exactly why it pulled back in the middle of April? We don't remember that at this point in time. And so we just want to make sure we're framing what's going on in the market appropriately. And so if this digs in and bounces right here, great. We're going to continue to hold through it, and we're going to be rewarded for that. But if it can't, if the market can't find a bid here and produces a sell signal and a new downtrend starts, then we need to be prepared to make changes to our portfolio. We need to be prepared to exit the market and hold more cash. So hope this update is helpful for you guys. Happy trading, happy investing out there. Try to keep the headlines, the politics, and the emotions out of your investing. Take care. We'll talk to you soon.